Rivian has struggled recently, but it might finally be on the up and up as reported by CNBC. Rivian stock has had its best day ever after the EV maker reports 2024 production and deliveries. And for those of you that have kept up with Rivian, you know that this is desperately needed good news for the company, which has not been doing super well since its IPO in November of 2021. Going back to the article, shares of Rivian Automotive recorded their best day ever after electric vehicle maker reported 2024 production and deliveries that were in line with previously announced expectations. Rivian stock closed Friday at $16.49 per share, up 24.5% during the session. That is the largest daily percentage increase for the stock since the EV maker went public in November of 2021, according to FactSet. The prior record was 23.2% set in June. And in a time when Tesla is missing deliveries, the fact that Rivian is able to hit them is actually pretty good. Even though Tesla by number of cars delivered absolutely dwarfs Rivian, you will inevitably get these comparisons of one electric car company is missing deliveries and so the stocks are going down, and another electric car company is making deliveries and so the stocks are going back up. And that comparison is really important for Tesla because it gets them a lot of free publicity as people start to wonder if this new car company could be the Tesla killer. And as for specifics about what they did, we get some more information here. Rivian on Friday said it produced 49,476 vehicles in 2024, including 12,727 trucks and vans during the fourth quarter, and delivered 51,579 vehicles, including 14,183 models during the last 3 months of the year. The automaker's fourth quarter deliveries topped estimates of 13,472, according to 15 analysts polled by Visible Alpha, according to Reuters. But it's not just CNBC that's reporting on this and making Rivian seem really good. The Motley Fool has also classified Rivian as a buy stock. Here's why Rivian stock is a buy before February 20th, I presume, of this year. Rivian stock price has been volatile over the last 12 months, gyrating the price between $8 and $20, but make no mistake, long-term, this electric vehicle maker has huge growth potential, and next month could be one of the most important announcements in the company's history. If you're looking for growth stocks with high upside potential, Rivian could be the perfect fit for your portfolio, but there are a few things to know about before jumping in. But the glazing continues. You can see the 24/7 Wall Street Journal has it as well. Rivian price prediction and forecasts from 2025, which is this year, to 2030. And if we come down here to their forecasts, we can see that they are predicting that Rivian could hit $140 per share in 2030, up from $13.85 or where it is around here. So basically a 10x return on your money, and 10x in 5 years. That's really good. That's a great way to make $1 million if you've got $100,000 to invest. So all of this news is looking really good for Rivian. All of these large mainstream publications are talking about how great it is that their stock price is jumping, how well they're doing in their deliveries and their ability to scale and actually hit analysts' expectations. But what these headlines aren't telling you is just actually how badly Rivian is actually doing. See, the news of this stock price jump came out on January 3rd. And if we look at Rivian stock since then, going for the last 1 month, so we can get an accurate reading, it jumped from $13.25 to $16.49. And then basically continued to dip, almost back to where it was before. And sure, it's had a tiny jump in the last day, but for the most part, Rivian stock is essentially back where it was. So yes, it was the best day ever, and it was followed almost immediately by 5 days in a row, 5 trading days in a row of doing badly and going back to essentially where it was previously. Anyone who didn't sell here at the top at the same day everything was announced basically had almost all of their gains wiped out. And this shows that investors in the market doesn't really have faith in the company. As soon as the stock started to go up, people started to bail. Probably they bought in somewhere slightly lower, or they had bought in a while ago and the stocks were continuing to go down. And they were worried that either one, they had made some money, so they may as well bail, or two, they were worried that this was the last chance for them to get out before the stock basically went to zero. But it's not just in the last month that the stock is down. If we look in the last 6 months, the stock is also down 20%. The last year, the stock is down 21%. And the last 5 years, which is all time because they only went public about 4 years ago, the stock is down basically 90%. If you had invested in Rivian right when it went public, you would have lost 90% of your money. And my favorite thing to do in these instances is compare it to the S&P 500. So November of 2021, 90% down. If we come over here and we go 5 years and we say November of 2021, We are up 26.66% since November of 2021 if you had invested in the S&P 500. So if you had invested $100,000, if two people, one person had invested $100,000 in Rivian, they'd be down to $10,000. Another person had invested $100,000 in the S&P 500, they would be at $126,000. And that's including this time period here where the stock price basically for a year and a half didn't do anything because inflation was so high, people were bailing out of the market. But since the low in September all the way up to now, we're up almost 65, bordering on 70%. These are phenomenal and unprecedented returns. And in that same time, Rivian has gone to zero. All these headlines talking about how Rivian is having amazing stock prices, just the headlines are being sensationalist because it gets you to click. And those clicks make them money. What these headlines don't tell you is that the stock has been failing basically every day for the past 4 years. And all that happened here was it failed slightly less for exactly one day and then tanked again the next day. Also, if you like this kind of finance deep dive into the news, please subscribe to the channel. I'd love to see you around here on some other videos. Now, I can't say if Rivian is a buy or not, but what I can tell you is that basically every step since their IPO in 2021, they have completely botched it. In 2021, they IPO'd, and then almost immediately, their stock started to tank. And here's an article from December of 2021, 3 reasons why Rivian stock crashed this week. And it talks about disappointing production numbers. They were going to produce 1,200 vehicles by the end of the year, but they produced essentially half of that and delivered 1/3 of that, which is terrible and far, far, far below the expectations that analysts had. Wider than expected losses. Rivian lost a tremendous amount of money. It reported a net loss of $2.23 billion for the 9 months ending in September 30th, 2021. $1.23 billion of that, which came in the 3rd quarter, which was far above the Wall Street consensus estimate of $1.04 billion in losses. That's $200 million more than they thought they would lose, that they actually ended up losing. It was a terrible IPO. But then in 2022, they did even worse. Why Rivian stock plunged by 70% in just the first half of 2022. And then here it goes into what happened. So Rivian Automotive stock ended 2021 with a market capitalization of nearly $94 billion. Within the next 6 months, Rivian market cap was all but wiped out. The EV stock plunged 75% in the first half of 2022, according to data provided by S&P Global Market Intelligence. Although investors started dumping stocks from early 2022 in anticipation of rising interest rates and a slowdown in the economy, Rivian's free fall had deeply underlying concerns behind it. Unfortunately, the company isn't out of the woods yet. And then here it talks about all the issues that Rivian was coming in contact with. And a lot of it is the same stuff we saw previously. Delayed production, lower sales than expected, including this huge 100,000 unit order from Amazon. And then Amazon went with another electric car company. So people were worried that Rivian was being left behind and wasn't going to get huge amounts of orders. There was an unexpectedly big loss here of $2.5 billion just in the 4th quarter alone against a revenue of only $54 million. They lost $2.5 billion and made $54 million. That is almost a rounding error when you're talking about numbers this big. Now, you could reasonably argue that it's not Rivian's fault, but to that I would say it is their responsibility as a customer to set expectations for their investors. Stocks go down when expectations that are set for investors aren't met. If Rivian knows they're going to lose a bunch of money, then they have to reasonably estimate the amount of money they're going to lose, when they're going to stop losing that much money, and how many years it's going to take for them to be profitable to see what kind of ROI that the investors can get. And when they fail to do that, that's when investors get scared and bail, because clearly their numbers are not correct. So what else isn't correct? Well, you don't know anymore. So you cash out your stock and take whatever loss you have. But it wasn't just 21 and 22. No, 2023 was also bad. You can see these next 2 headlines. Rivian stock hits new 52-week low after the automaker misses 2022 production target. And this is just on January 4th of 2023. But then this next headline, Rivian stock dropped to the lowest in 6 weeks on a weaker 2023 outlook. And this was in March of 2023. And you're never going to believe this. 2024 started out with a very similar story. Rivian stock falls as EV maker reports 4th quarter results, announces 10% job cuts, and this was in February of 2024, and that story has continued on and on. Rivian has basically at no point done well or met the expectations of the market or the investors or any analysts that are looking at the company and the stock. And so I have no reason to believe that they're going to be able to start doing it now, despite the fact that they managed to, for the first time ever, by the way, hit their production deliveries, which, by the way, these production deliveries that they hit, They're not the original projections. These are these production delivery numbers that they hit. These are revised down from the original goal that they had. So the stock going up almost doesn't make sense. Every one of these news sites that's sensationalizing the fact that a failing company failed slightly less for a single day is trying to sell you something, whether that's the ads that are on CNBC or Motley Fool's investment advice portfolio stock advisor thing that they have here on every one of their web pages. They're trying to get you to buy something. Could be your attention, could be your actual dollars. That's what's at stake here. Not a company that's managed to turn things around and is doing fabulously that you should buy into, but some money that the company wants to make to sell you something. Now, Rivian may or may not make a comeback in the next year, 5 years, 10 years, I don't know. And frankly, I don't care. But my thing is, please look into these headlines before you get sensationalized or drawn into the excitement, because Rivian is doing really badly, and I have basically no reason to suspect they're going to start doing less badly anytime soon. Thanks for watching.